Let's discuss the broad sell-off further. Mohamed El-Erian joins us now on the phone. He's Chief Economic Advisor at Allianz. Mohamed, thanks very much for joining us.
Thank you, Wilfred.
So what's your take for today's move specifically and the relevance of the 2s, 10s inverting?
So I think that if you take the markets as a whole, stocks, oil, commodities, FX, etc., it's actually a very rational reaction. A rational reaction to concerns about global growth after the numbers we've gotten this week, about policy ineffectiveness by central bank, about liquidity being not as deep as people have, and also a sense that we've entered a deglobalization phase. So put all these things together, and I think what you're seeing is actually a very normal market reaction.
I think that's a really key point, Mohamed, this idea that we're entering this deglobalization phase right now. I mean, we're really in uncharted territory. How does this play out? And can you take lessons from history and apply it?
Well, we know certain things. We know that the system is built and connected for globalization. So when you start deglobalizing, there will be many more losers than winners. Ironically, the U.S. is a relative winner, not an absolute winner, but a relative winner in this environment because the economy depends less on the rest of the world. But you have to rewire the system, and rewiring the system is not easy. So expect a lot more market volatility. Also expect that certain darlings of the market are going to look less attractive. And finally, economists grow up with the notion that you want to be a small, open economy. You want to leverage the global economy. Well, suddenly, it is the large, relatively small economies that are going to be doing better in this environment.
Mohamed, how significant is the move in the Argentinian peso this week? It's fallen about 32% in the space of a week. Is that something that just automatically through transmission mechanisms and technical analysis is going to spook risk assets?
It should spook some of the EM investors who have gone into this asset class thinking it's liquid. I mean, this is a massive overreaction of markets, but it's an understandable one. You have a lot of what's called tourist investors, people who go in and don't quite understand those markets. And when volatility comes, they tend to do the wrong thing. So this is just a reminder, Wilfred, of a bigger issue that I have discussed with you over the last couple of years, which is that the system has overpromised liquidity to its end users. And when you hit any sort of pothole, the liquidity disappears on you completely, and you get these massive gapping in prices.
Mohamed, I wonder what you think about this notion that the Fed or that central banks in general have become politicized. And I'm not even talking about President Trump tweeting, which I know he was doing just again earlier today about the Fed and the Fed chairman. I mean the fact that you have these trade policies, fiscal policies here in the U.S., but really the world abroad, this rise in populism in many countries right now. Is it holding central banks hostage?
I think it's markets that are holding central bank hostage. I think, look, on the politics, there's no doubt that central banks are under growing political pressure, and you've seen it have a huge impact in India, in Turkey. In the U.S. so far, it's been words. It hasn't been actions. Elsewhere, it's been actions. But that is a reality that's out there. But I think your point is critical, is that central banks are being held hostage, but by markets. So look at what's happening now. Look at the narrative. The markets are going to push the Fed to do 50 basis points. Some are even starting to say, why not do an emergency call? The Fed emergency cut. The Fed sits there and sees no real economic reasons to move, and yet it will have no choice but to cut by 25 to 50 basis points in September. Why? Because if it doesn't, it will disrupt markets. And the more it cuts, the less impact it has on the economy, the less impact it has on markets, and the greater the risk that they have no ammunition when they really will need to cut.
Mohamed, one central bank that doesn't have much ammunition is the ECB. Do you think the Eurozone is headed for a recession later this year?
Yes, and I've said it over and over again. People underestimate how weak Europe is. The Germany number today should not have come as a great surprise, and yet they did, because people think of Germany as being a very predictable, stable economy, and they're finding out that it's not that predictable anymore. yes, we are going to see sub 1% growth in Europe. Then you approach what economists call stall speed, when simply you don't have enough momentum, and bad things start to happen. Now, ironically, the ECB is going to respond by cutting rates and restarting QE. That's going to push yields even lower. It's going to actually not do much to the economy. It's going to damage the financial markets more. And the answer, Wilfred, you know this, is to deploy other pro-growth policies. And the irony is they have them. They just don't have the political will to implement them.
To that point, though, Mohamed, I think it is worth dwelling on this. Germany has the financial firepower to deliver its own fiscal stimulus, but Italy, if it plays by the political rules, does not. And we have a vote of no confidence coming up in a week's time in the Prime Minister there. Is there significant political risk across Europe as well, even outside of Brexit?
Yeah, absolutely. You and I like football. So imagine that you're fielding a football team and your five main players, your difference makers, are all completely distracted politically. The UK distracted by Brexit. Spain and Italy distracted by elections. Germany distracted by an ongoing political leadership change. France distracted by opposition to the reform measures. So when you have that amount of distractions among your main player, your team will not do well. Plus, you have no teamwork to speak of going on in Europe right now. So it is a problem, and politics is increasingly influencing economic and market outcomes, and central banks can no longer shield markets from the messier politics.
Mohamed, I'm going to ask you the same question I've asked some of our other guests on air today. And looking here at the U.S. specifically, I mean, the fact that the consumer has been so strong, so much does hinge on consumer sentiment. We also know how closely linked that is to the market as well. With the Dow down 800 points right now, all the major averages down more than 3% today. For maybe the investor who's not paying attention to the market on a daily basis, but is tuning in now and seeing these numbers, what would you tell them?
So first, I'll tell them, be careful of a self-fulfilling expectation cycle. So people tuning in, if they look not only at the Dow down 800, but if they look at the headlines screaming, this is the first inversion since 2007. It has been a great predictor of recession, and they don't realize that the yield curve is inverted. It is inverted because of distortions. There is a risk of self-fulfilling expectations, meaning that they become more cautious, they spend less. As they spend less, businesses invest less. And next thing you know, we've talked ourselves into a recession. I think that risk is going up. And we've got to remember that the fundamentals of the U.S. economy and of the household sector in particular remain solid. So there's no reason to slip into recession unless you get self-fulfilling expectations. And that's the risk right now.
Mohamed, great to see you as always. Thank you as well for a soccer analogy. Always welcome.
Thanks so much.